뉴욕나우. 안녕하세요. 한국경제신문 뉴욕 특파원 강영연입니다. 오늘은 리처드번스타인 자문의 댄 스즈키 차석 CIO와 뉴욕 시장에 대해서 이야기를 한번 나누어 보려고 합니다. 스즈키 씨는 금리나 정책과 같은 거시 분석을 통해서 시장에 대한 정확한 분석을 내놓는 전문가로 굉장히 유명한 분입니다. 아마 CNBC나 이런 외신 보신 분들은 자주 보셔서 얼굴이 낯이 익으실 거예요. 근데 한국 언론과의 인터뷰는 이번이 처음이라고 하시네요. 스즈키 씨와 함께 좀 더 자세한 이야기 해보겠습니다.
Hi everybody, thanks for joining us today. Is that the markets are a bit higher by the end of the year, but I think there are clearly, some risks that investors need to be mindful of. I mean, if you just think about the setup for where we are this year, it's been pretty much an unsustainable pace. We've basically had the fastest doubling of the market in history. And the number of new highs set for the S&P this year is the highest of any year at this point, going back over a quarter of a century. Right. So, we've had this, very, very strong move up without any big moves down. I think it's normal to expect that at some point you're going to get some volatility. But given that I think that, the recovery is still intact, I think ultimately, most likely scenario is the market will go higher. I think they're actually all going to turn out to be pretty benign, pretty minor in terms of, what drives the market over the next 6 to 12 months. So I'm actually not that concerned about each of those. But if I were to put, some level of importance on the risk that you mentioned, I'd say, for the markets right now, the Fed tapering is a big issue. And that's one of the things that could cause a lot of volatility. And, given how far the markets run and how expensive the market is, it doesn't take a lot for the market to sort of overreact to what the Fed's going to say or do as we enter this tapering period. So when I think about what really matters to the markets, I think ultimately it comes down to corporate profits. How much money are these companies going to make? And I don't think that the tapering story really impacts that. So a bigger impact on corporate profits is obviously, China slowing. China's been the biggest source of global growth over the last decade, and it's still true today. So the fact that slowing is going to have a real impact on profits, but I think a lot of those fears are sort of priced into markets. And given how much room the rest of the world outside of China has to recover, I actually think the overall global growth story and the overall profit story is actually pretty good. Yeah, it's a really good question. Do I think that the profitability, the profit margins that you are talking about are sustainable into next year? I think it'll be really difficult. And I think the reason it's difficult is because some of that margin, some of that profitability has been boosted by the increased productivity and lower costs associated with this pandemic environment. A lot of companies aren't dealing with the normal travel expenses and coming into work-related expenses, and yet they're able to get a tremendous amount of productivity from their workers. The other thing to keep in mind with respect to profit margins is, the inflation story. You've seen these intense supply chain disruptions, and I think that those supply chain disruptions are going to put more pressure on margins. So, given the combined impact of those two factors, returning to normal and the supply chain disruption, it might be difficult to get this type of, this level of profit margin. So that might be a drag on overall growth. But at the same time, as I mentioned before, I think overall economic growth is going to be so strong, it's going to make up for a lot of those pressures as well. I think it's going to be with us for a long time. We were on the way to sort of working through those backlogs and getting back to normal and supply chain disruptions. And then we got hit with another wave of supply chain disruptions from Delta. And so you're having these enormous strains put on the supply chains at a time when they were already under immense pressure. That's going to have prolonged impacts on the overall supply chain. So certain markets are going to return to normal faster than others. But as we look, over the next 6 to 12 months, I think 6 months from now and even 12 months from now, we're still going to be feeling, the impacts of that. And one of the big impacts of that is going to be, on prices. I think prices will still be, sustainably higher, as a result of the supply chain impacts we're dealing with today. I do think that the cyclical stocks are more better positioned to deal with inflation than, say, big tech stocks. And the reason is, I mean, typically, big tech stocks are also cyclical, and they still are. So they'll also benefit. But if you think about the biggest beneficiaries, typically in inflationary environments, you have commodities going up as well. And so being a commodity producer in that type of environment is very positive. So energy, material stocks, those types of stocks tend to do well because they're selling those underlying raw materials in an inflationary environment. And also banks tend to do well, right? Because typically higher inflation, higher interest rates, that's a good environment for the profitability of banks. Whereas for big tech stocks, they're less sensitive to those inflationary dynamics. And at the same time, if interest rates go up, the value of their future profits, which are often, the bulk of their profits that are going into the valuations, they're going to be much lower in a higher rate environment. So certain types of cyclicals will benefit, and that's the type of cyclical stocks we're trying to own today. In general, I think that, politics is more of a distraction to the underlying fundamentals than an actual real driver of what works. And, people would have thought that, when Trump was the president, that would have been great for energy stocks and steel stocks, and they did very poorly. People would have thought that Biden being elected president, because he's, got a lot of green policies, would have been terrible for energy, and they've been some of the best performing stocks during his presidency. So I would say that on the margin, infrastructure means, better domestic growth and more domestic investment. So, it probably is going to have a positive impact depending on how, the actual legislation that gets passed. I would bet on some of those domestic beneficiaries of that, which would be, infrastructure related stocks, industrial related stocks. And also, in order to build all this stuff, you are going to need more energy and you are going to need more raw materials and commodities. Those types of stocks, as well as sort of the financing behind it, which would be, localized, banks and things like that, they should do extremely well if we get a big infrastructure pack. Yeah, I think that's right. I mean, financial is one of our favorite sectors right now. So absolutely. Yeah, I think that the main impact of tapering, the bond market is going to start acting, it's going to be more of a free-floating market. Up until now, you've had all this issuance of new debt from the government because we've been having to fund all the stimulus, but the Fed has been the main buyer of that. So you haven't been able to have a fully functioning, free price discovery with interest rates. And so I would argue that interest rates today are artificially low. The Fed now owns over 50% of the 10 to 20 year maturity treasuries out there. So, a huge amount of treasuries, and they're still buying. And I think that once they slow their pace of buying, that's going to allow for better price discovery. And I think that given the underlying fundamentals of the market and given how much debt is outstanding, I think the right price for bonds is lower, which means the right price for interest rates is higher. So I think the main takeaway from taper is that eventually you're going to see higher interest rates. And if we're right and you start to see interest rates rise again, you could see more bear markets occurring. So being mindful of that in portfolios, not just on the fixed income side, but again, there's going to be implications on the equity side as well. I think it's going to be incredibly important for investors. I think that, seeing a taper tantrum like what you saw in 2013 seems pretty unlikely to me. I mean, part of the reason we got the tantrum in the first place in 2013 was because it was a new phenomenon. Quantitative easing was new, and therefore the tapering of that was new. Now it's been all that the market's been able to talk about for the last 5 years. So given how much focus it's in and how much the Fed has been dead set on, projecting and communicating, on the timing and the gradual nature of the taper, it's hard to think that it's going to catch the market by any type of surprise. I mean, I think you're going to get fits and starts in rates, and you could get a period where over a short period of time, the rates move up very quickly, but I wouldn't expect anything like the magnitude, full magnitude of what you saw in 2013. I think there's a very clear bubble in the US equity markets. And if you think about where the epicenter of that bubble is, it's US large cap growth companies. So can growth companies continue to do well? Absolutely, they can. Bubbles can get bigger and bigger. But is that something that we want to chase? I don't think that that's a prudent thing to do as an investor. I think that value is much more attractive, not just over the long term, but also even over the near term. Because if we are in the midst of this big recovery, then value stocks should actually grow profits faster than growth stocks, right? At least on the margin. And so I think that you're able to get faster earnings growth over the next 12 months at cheaper valuations and avoid some of the bubble risks in your portfolio. I think it's a win-win. I think there are pockets of attractive areas of the US market. I think small cap value stocks are attractive. As I mentioned before, some of the cyclical stocks really haven't gone along for the ride with some of the bubble-like stocks in the US market. I think that over the longer term, over the next 5 years and the next 10 years is going to be weaker. But over the next, 6 to 12 months, I think it's very difficult to say. The dollar is likely to weaken simply because, there's going to be a catch-up period where the US has led this recovery over the last 6 to 12 months because of the vaccine rollout and because of the stimulus. Now, meanwhile, the rest of the world is less vaccinated and is dealing with the Delta more severely. As that reverses course, or you have a catch-up story, and I think the strengthening of growth outside the U.S., should put some pressure on the dollar as that happens. I think about things like, our record deficit, both current account deficit and budget deficit in the U.S. The policies in place, the monetary policies in place. When I think about those dynamics and also, the relative growth prospects, the US dollar has been one of the strongest currencies over the last decade. And rightly so. But over the next decade, typically you tend to see a reversal, especially given, the amount of debt that we're issuing in the US. And the amount of inflation that I think that we're likely to see. Both those are probably going to be negative dollar. Oh, yes, that's right. I think the global recovery is going to be stronger than people think. And I think it's going to be led out by international, countries outside the US. And I think that's going to have an impact on the dollar for me. Well, I don't know if it's the most important thing, but I think that it's the biggest thing holding back the rest of the world's recovery. If it weren't for this Delta wave, I think the rest of the world would be doing much, much better. But as it stands, because the US is so well vaccinated, it's not the only country that's well vaccinated, but it's the biggest major region that's well vaccinated. On top of, as I mentioned before, just the sheer amount of stimulus that's been put into the economy. The combination of the two, the US is just in a much stronger position here. But that conversely means that as you look over the next 6 to 12 months, there's probably more recovery runway in some of these more beaten down economies. No, I'm not. In fact, I think that, in the US on a national basis, cases are probably peaking. And the epicenters of the Delta wave in the US, they're peaking. And I think we've seen that in every region of the world. And I think on a global basis, we're probably nearer to the end than we are in the beginning. And, given how fast and how widespread, the pandemic has been, so many people have been infected that we've created this widespread immunity in most regions of the world today. So once we can get past this wave, I think that the recovery is going to look a lot better, especially as at the same time, we're also rolling out more and more vaccines globally.
지금까지 스즈키 씨와 함께 테이퍼링, 인플레이션 등과 같은 미국 시장의 주요 이슈에 대해서 자세히 이야기해 보았습니다. 월가의 시각을 직접 알아볼 수 있는 의미 있는 시간 되셨길 바랍니다. 지금까지 뉴욕에서 강영연입니다.